Hello friends, this is Raj Sastry from Raj Option Trading. Today is March 1st, 2022. Let's talk about EPAM Systems, ticker symbol EPAM. So it's a software company, it's into information technology. It's really engineering for the future and growing in all the cylinders. So with that, let's jump in and get started. We'll start with a company overview, look at the competitive landscape, review charts, look at a deep dive and look at the financial summary, stock performance, and then do a final verdict. Can you buy EPAM or should you hold on to it? So, with that, from a leadership perspective, we got Mr. Dobkin here. Great approval rating, 75%. That's a good one here. So, that tells you the CEO is really leading the company. He's doing a great job. Leadership checks out here. And from an EPAM system, what they do consulting, design, engineering, operating, and optimize. They're one of the great places to work, and they're also Barron's 100 most sustainable company. It looks like company doing right things and getting the accolades from the industry. And they do 16x website deployment capacity, 350 million players in the Epic Games, and they also increase online quotes for an insurance company. So overall, companies into multiple verticals, as you can see here, and seems to be doing pretty well. All right, so now let's look at company's background here. It provides digital platform in the software development area. As you can see here, it's into multiple areas: North America, Europe, Russia, Belarus, Ukraine, and so on and so forth. As you can make out here, they're in the battleground area where there's Russia, Belarus, Ukraine. That's where most of the software development happens, and many of the data centers are located. That's one of the reason this stock is a battleground stock. As Russia Ukraine tensions increase, this stock is coming down. Look what's going on here. Stock is coming down nicely here. Look, nice downtick here. The moment Russia-Ukraine tension started, this stock started going down slowly. That's what is going on here. So at this time, you got to be a little bit careful. If you're a contrarian, you could slowly start picking up here. I think this is probably good time to slowly start buying here. Understand there will be short-term pain because it's in the battleground, but if you can take short-term pain, I say wait a little longer. But for folks who are contrarians, it's a good time to slowly start buying some EPAM here. Look, from a stock perspective, look what's going on here. In one day, stock plunged by $174 here, 45% drop in one single day. That's a huge drop here. So you got to be careful. At this time, look, from a 52-week range, they're at 52-week low. So it's almost cut in 1/3, as you can see here, from 52-week high. That's why, as a contrarian, you could start buying up here. It's a great company, profitable company. It's making money. Look, from an analyst perspective, it's a moderate buy at this time. Nice $11 billion market cap, even up here. So that's why it's intriguing company here. You could slowly start buying this company here. And from a news perspective, look, EPAM system is crashing today, as you can see here. They withdrew financial forecast, mainly because they make software in Ukraine. It's a battleground place here. If Ukraine closes down on, this company can have issues around the software development. And as you can see here, basically they withdrew their financial forecast and full year guidance due to uncertainties related to Ukraine. So it's really a battleground stock here. So that's why you got to be a little bit contrarian. But I like the odds here. It's down huge here. Companies making money. And as tensions ease out in Russia, Ukraine, this company can bounce very well. So that's why it's a battleground stock. So if you can take some short-term pain, you can start accumulating slowly. So with that, let's jump in here. From an analyst perspective, look, lower forecast is 410, well above current price, and high forecast is 835. It's almost more than 4 times current price here. So that's why it's a good intriguing play, because we have 10 sell-side analysts who offer this guidance. Looks like overall we are doing well. All right. So now, from a competitive landscape perspective, look, we got a lot of industry peers. What I did is I looked at better run companies, not all the companies. Look, all these companies have got nice Altman Z score. These are companies with a lot of money, and they also have a nice Piotrowski F score. That tells you, the books are consistently well, especially when Piotrowski F score is above 6 or even 5 for that matter. And look, EPAM is at the top here, no surprise. And look at the price drop here in one day, 45%. It's a huge big drop here. Even up here, they are the industry leader. They are doing well from a profitability perspective and growth perspective against the industry here. And nice overall huge score here for this company that tells you profitability, growth, as well as financial position perspective. This company is leading the way. And we got few more here. We got Grid. Grid is also a very low price stock, as you can see here. It's got 43 as a score. You could look at this one also. The problem is this company has not made money for investors. It's been money loser for a while, but look, it's doing okay from a financial perspective. Right now it's down. You could take a look at that one also. And as you see here, we got a few more. Look at the two over here, Accenture and G. Both are great companies. Look at the overall rate here. I think these are the great companies. You could buy them, especially because Piotrowski F score is so great. That tells you books are in a very good shape here. So you could buy it here, and they're also doing well when you compare them to industry. And we got one more here with the great grade 9 here when it comes to Piotrowski F score. That's a Cognizant Technologies. It's also IT company, as many of you know here. And look, they got a nice score of 97 here. And this company is making nice net margin, 12%. You could go with this also. And I also like Infosys here. It's a great company to buy. So you could buy either Infosys or Wipro. Infosys is a little more good when it comes to performance. You could buy Infosys. Wipro is also good. They also pay dividend. And last but not least, we got Lidios here, or Lidos actually. Lidos is a good one here. Look, they got nice 97 overall score here. They're doing very well from a financial perspective, and they have a nice net margin, 6%. Not great, but it's okay. So these are the few stocks you could look at. But look at the companies with net margin positive. The greatest net margin out of all these companies goes to Infosys, and then Wipro, as you can see here. Then comes EPAM. You could look at those names here and buy them. They will do well as you go forward. I also love Accenture. It's a great company, does very well. And you could look at Cognizant also. All right. So with that, let's jump in and look at EPAM. Look, EPAM Systems, it's a great company, and it's in the information technology, USA-based company. And look, they got a lot of volume here. Trading volume is huge after the earnings announcement yesterday, and not too much short ratio. I think they're doing okay there. And it's a high beta stock, meaning if S&P 500 goes up by 1%, this goes up or down by 1.62% compared to industry. And from a margin perspective, low price to sales ratio, that tells you stock is cheap here from a valuation perspective. And they got a nice net margin here. Company is making money, not a money loser. I mean, net margin is 10.6%, as you can see here. And look, they got nice earnings per share growth for this year as well as next year. That tells you analysts are predicting this company will do well as we go forward. And look, from a financial perspective, free cash flow positive company. It's not losing money. That's a great sign here. And quick ratio is 3.3. They got enough money to cover short-term liabilities, and this company does not have too much debt. That's why debt to equity ratio is very low. I love it when it's much below 0.5. This company checks the box here, does well from a debt perspective, not too much debt at all. And from a return perspective, look, it's been negative in the short run after this huge drop here. The moment Russia tension flared up, this company stock started going down. So at this time, I think it came too much quickly too much down, so I think it's good to slowly start buying here. And from a RSI perspective, stock is sold off here, as you can see here. IV percentile is very high. For the folks who want to sell some put option under the current stock price, you could do that. Understand you might end up buying the company if it reaches your price, but it's a good one here. A lot of people are hedging and buying put options. Look, that's why put call ratio is very high. Folks are buying put options to hedge their position here. And look, insiders are selling a little bit, not too much. It's not a huge deal here. And look, from a finance health perspective, grade B here, that's a good one here. And growth is also B, that's a great one here. And they're growing nicely against the industry. Growth rank is 1 and profitability rank is also 1. Company doing great here. The problem is geopolitical tension. That's what is causing some issue here. All right, now let's jump in and look at EPAM system by numbers. Look, this company has been doing consistently. Earnings per share is going up nicely. That's a great one. Sales is going nicely on a yearly basis. That's a great one here. Shares outstanding is pretty constant here. That's good. Company is controlling number of shares, not diluting. That's a great one here. Quarterly revenue, bar none, great, going up. I like it that way. Operating expenses also going up, as you can see here, which is understandable. It's kind of growing in pace with the revenue. When both revenue and OPEX increases, and if the revenue increases more, that's a good sign. That's what is going on here. And net income is also going up nicely. That's a good one here. So from a number perspective, company checks out. They're doing great. All right, now let's look at earnings history. This company, as you can see here, it's consistently beating earnings per share quarter by quarter. That's a great news. And they're also beating the revenue consistently. So what this means is this company is really surprising Wall Street positively every quarter. That's a great news here for past couple of quarters. So that tells you this company has got what it takes to consistently meet and beat the estimates. Wall Street likes that. All right, now let's look at the technicals here. From a technical perspective, look what's happening here. Stock has been going up gangbusters pretty well, but 2022 rolled in and look what's going on. The moment Russia tension started, geopolitical issues, stock came pretty big down, as you can see here. So that's what is going on here. Company doing great, but it's a battleground stock because it's mainly located around Russia, Ukraine, Belarus. That's what's going on here. That's why stock came tumbling down here. I say at this time, most of the bad news is baked in here. So that's why you could slowly start buying this quality company and go from there. All right, now if you look at the near-term chart here, look, stock has been going down for a while because of the geopolitical tension. Now, huge drop. Company doing well from earnings, but a future expectation and guidance is they're not providing because of the uncertainty. That's what is going on here. Hugely bearish currently. Look, red line going up here in DMI chart, blue line going down. At this time, there's a blood in the market. You could jump in as a contrarian. You could buy some. All right. Now let's look at what should we do here. Look, this company is a battleground stock. Company has done nicely. They beat the expectation here by 25 cents on the EPS side and $1.20 billion on the revenue side. So company is growing here. No issue on the earnings. They're doing well. And they also continue to benefit across all the geographies and doing well in digital transformation. And main issue here, EPAM Systems withdraws financial forecast. It makes software in Ukraine. That's one of the main reason here. So it's a battleground stock. So its largest software development sites, they are in Ukraine, Belarus, and Russia. They have delivery centers there. That's why it's going down because of the uncertainty in that region here. On the positive news here, it's a recognized for great place to work. That's a great accolade for this company. So what I recommend is it's a battleground stock. Expect short-term pain. If you're a mid to long-term buyer, go buy this stock here. But expect some short-term pain. You can have a nice benefit as this geopolitical tension eases out. This company is doing great consistently for a long time. So with that, Thank you very much. Happy investing and trading. Please subscribe.